What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over two chart patterns that I really like. Check it out. So the reason I'm making this video on these two patterns is because you guys have asked for it, and you've asked for it aplenty. And even though I have an older one in the in one of my playlists on the channel, I figured I'd do an updated one here for you. And that's what we're gonna do in this video. We're gonna go over two patterns. Honestly, it's actually three patterns because one chart will have two patterns in it. So we're gonna go over these three simple patterns here. I wonder who says that we actually did a video on. We're going to go over these, and I hope you guys enjoyed. If there's any other videos you want, let me know. Drop it in the comment section below, and I'll make them. I am working. I've heard you. You want an options video. I am working on an options video, and I will have that options video out for you this month. So if you want to be alerted when that video drops, any of the follow-ups and my recaps, make sure you hit that notification bell so you're alerted when I drop these videos. Alright guys, so we're going to go ahead and jump into this video here, okay? Now, in this video, we're going to go over just two patterns that I like a lot. One of them is very popular, and you all know it, okay? We're going to go over a little bit of details on it. And then the first one is one that, I mean, I don't really see it mentioned as much. Maybe it's not as cool looking. I don't know what the deal is. It's just I don't hear people talk about it as much. But it's a valid pattern. It's probably, to me, even a safer pattern than the second one we'll talk about, even though the second one is, like I said, much more popular. But we're going to go ahead and jump into this. But before we do me that quick favor, smash the like button, subscribe to the channel, and make sure you comment in the comment section below and let me know what your favorite chart pattern is. And if you want me to go over that one as well, I'll gladly go ahead and do that too. So drop that in the comment section below. Now, without any further delay, let's go ahead and jump into this recap right here. Well, not recap, this little lesson. So here we have SOLO. Okay, this is an older play that happened last year. Okay, in 2019, we had SOLO with a big gap up from what is this, probably like around $3.40 up here to a high of $4.19. So this is right out of the bell. These are 3-minute candles. SOLO right out the gate just made a nice push. Okay, nice push from like 380 to 419 and then pulled back. But what you need to notice here, and this is what I've learned, is that you had that big push on real nice big steady volume, and then you had this big, and it's a big pullback, let me tell you, okay, because it went and made a whole new low of day. But on much smaller volume, you got to realize that this gapped up from down here like 340 area, okay? So there's going to be people who are going to take profit, okay? People are going to take profit, people are going to get short, and then eventually what's going to happen is once those shorts start to cover and we start to show health in the stock, new buyers are probably going to come right back into the stock. So you have the push right back up to high of day. Now there are multiple ways to play this. I don't remember. I'd have to go look at the daily. I don't remember if there's any daily lines here because I typically don't draw my lines on my E-Trade chart. I typically draw my lines on my trade idea charts. Okay. If you're interested in trade ideas, it's the scanners that I use. In the description section below, you will find a coupon code as well as my link to trade ideas. Now, with that out of the way, you have the move, right? If there was some daily levels here, I probably would have looked to maybe take a starter position somewhere in here. Okay, above this 375 line, and maybe add over VWAP and look for the push to higher day. Typically, that's how I would play this, okay? And then at higher day area, I would typically take some off. Some of my position I would take off because I would have a starter, I would have full position, take part of it off, and then I probably would have taken some more off in this big push. Every time we push, I would have taken some off, and then probably would have been flat up here, or even taken a little bit more off here and held on to the rest. Now, that's one setup. Actually, we're going to go over three setups. So that's one setup here that I would have traded. The second setup within the same chart is what I consider a very safe, lowest risk setup. Is that you break the high of day on increasing in volume. You want to see huge volume pour in on that high day break. We get this humongous volume bar right here as we break the high of day. And then we start to pull it back in. When we start to pull it back in, we want to see the decreasing volume. This is indicative of, just casual standard profit taking, not panic selling. Okay, not panic selling. Let me see if I can show you some panic selling while we're looking at this pattern here. Okay, not panic selling. You could consider maybe this some panic selling right out of the gates. Look at this humongous, over 3 million shares of Tesla sold right out the gates here. Okay, now we have that pullback into this previous high right here in the morning, into this VWAP that's lining up with that previous high, and this 90 MA that's in the area as well. A safe for me entry would have been an entry here in this 425 area, a little bit above, a little bit below, wherever I could get. Obviously, if I can get it lower, better. And a stop right underneath this area right here. So my risk was tiny. Like I could have gotten in full size right here, even a little bit bigger, maybe like a third add, right? Because my risk is so small, I can add more shares and still be within the same dollar amount risk that I normally would have. And then started, look to take profit up here in front of this high day. Why? Well, whoever shorted up here is probably going to start to, take some off or add, cover some off in here in front of this previous high, expecting a bounce. And we get that bounce. So as shorts start to cover, the stock starts to move up, new longs start to come in, and we get another push. Now we get this other push here. Volume isn't as aggressive. So I would definitely take off a lot of my shares up here in this general area and hold on to the rest, see if we get that push to $5. As you can see, very, very, very low risk type entry, small risk in other words, okay? So that's one of my favorites, one of my favorite patterns. Now the next one is the tried and true bull flag setup. This is Tesla right as it reported earnings this year, okay? Right as it reported earnings for Q4, okay? This is January 29th right here. I remember it was like yesterday because it actually was like 6 days ago. Oh, 8 days ago. So we have Tesla report earnings. We get that huge push. And this is so you can see that the same patterns we trade in small caps hold true in, if not even better, in these bigger cap stocks, okay? And you have the big push, huge volume. We have that flagpole. When you have that flagpole, you want to have huge volume. You have the flagpole, then you have the flags start to form. You want to have decreasing volume, showing that there's just some profit taking going on here, some new buyers stepping in, there's some shorts shorting, etc. And then once we got to that pivot point right here, we had Tesla break right out of that flag. Boom, right out of the flag. And when it breaks out of that flag, you want to see the increase in volume. Typically what I do in these patterns is I'll take a starter position within the flag, hopefully, right, the closest I can possibly to the bottom part of the flag, take a starter position with a stop just underneath that. And then as we break up and over the flag on an increase in volume, I will add to my full position. This isn't to say that sometimes I might take full position within the flag pattern if there's other stuff in there, like a daily level, or if I have VWAP and the 90 MA, or VWAP and a fib level. If I have a daily level, VWAP, and another level like a fib or an 90 MA in there, then that's 3 levels. I'm going full size, right? So you have the break out of the flag on an increase in volume. That shows you that you'll probably get a good chance of having an extension. And you do. You have the increase in volume and the big extension move. Obviously, this thing's a monster, and it went from $620 all the way up here to probably like $660 or something like that. Yeah, as a matter of fact, I remember this. I believe this was $660, $659. So that's a monster move right there. But that goes to show you the power of the bull flag when it does its job. Now, I can show you a failed bull flag as well. Let me show you a failed bull flag. Here you go. Here is a failed bull flag. It's not as pretty and clean as this. And that goes to show you that the pattern also needs to be clean. This is not the best looking pattern. You have huge, volume to the ups, to the fails. Like every time it tries to break through and out, it has like big volume. Breaks, doesn't make it, and then you have the fail. So it does fail. No pattern is 100%. If there was a pattern that was 100%, I'd put all my money into it every time I saw it. And so would everybody else that knew about it. So there's no such thing as a 100% proof pattern. But you can see here that sometimes the patterns work, sometimes the pattern fails, sometimes the pattern work. That's why you want to stay true to your stops. So that's it, guys. That's it. Those are 2 patterns. Very easy to remember ones. And I hope that you enjoyed the video. If you did, smash the like button. Remember to let me know in the comment section below what pattern is your favorite or what pattern you want me to go over, and I'll gladly do that. Subscribe to the channel if you haven't, and I'll catch you on the next one.